External auditors, not full-time employees of the company. They're external parties. They're certified public accountants, CPAs. They practice generally accepted auditing standards, GAS, no jokes, that's just what it's called, generally accepted auditing standards, established around the world really now, and they certify that the financial statements are presented fairly in accordance with generally accepted accounting principles, with GAAP or GAAP. So that's what external auditors do. They're from outside. They come in and say, okay, we've looked at the processes to generate these numbers, and we've looked at the reports themselves, and they present fairly in accordance with generally accepted accounting principles, the status of this company and the results of operation. Now let's be careful. The external auditors do not certify, they do not certify that the financial statements are completely free from error, because how can you do that? The external auditors can't check every last thing, so they're not saying that there are no errors here. The external auditors have a concept called materiality. You know, if something's big enough, we'll find it, but small things that are here and there, they are immaterial. They're not above a certain threshold, so we really can't say whether there are little things happening down there. We have if something's significant, we assert that we have found it. But if it's small, if it's immaterial, we really can't say one way or another. So they're not saying that the financial statements are completely free of error. And the external auditors are also not saying that the company they audited is a good investment. They're not saying anything about that at all. They're just saying that, hey, these financial statements tell you a fair story. Now, that story might be a bad story. That story might be a good story. What you're going to do with that story is your decision. They're not giving you any investment advice or any lending advice. They're not telling you this is a good investment. They're just saying the financial statements tell you the picture. Good or bad, it's there in the reports, and that's what we're certifying. We're not telling you it's a good company. We're not telling you they're completely free from error. We're CPAs here. We did our audit in accordance with generally accepted auditing standards, and the financial statements are fair with respect to their obedience to generally accepted accounting principles. How does a person get to be an external auditor? This sounds fun. What if I want to be one? Well, the qualifications of an external auditor. You got to be a CPA in order to sign an external audit. Being a CPA is not easy. Most states, you got to have 150 semester hours of college, many of those being accounting hours. You got to pass the CPA exam, which is brutal. You got to do continuing training each year. You got to have accounting and business expertise. You got to know the rules and the regulations. You got to know generally accepted accounting principles. You got to know generally accepted auditing standards. You got to know all that, and you've got to be independent. You can't have economic ties with the companies you're going to audit. So if you want to be an external auditor, you've got to be qualified, because your word has to be trusted.